Welcome to the weekly Forex forecast where we are turning market predictions into profits. Starting with Euro US dollar, we had this nice downtrend over here respecting the market. Now what recently happened is we had a break towards the downside through the support. Now ideally we should see a pullback towards the moving averages just over here. Could be a little bit higher, maybe this previous downtrend. And in this area I will be waiting for an exact entry opportunity, maybe a shooting star, maybe a bearish engulfing candlestick, some sort of price action confirmation. As you can see, the 12-hour time frame made the M pattern and actually broke the neckline as well, which is super important, which means a nice push exhaustion push scenario is very likely. Maybe towards the moving averages on the 12-hour, so you could potentially say entry over here, come back to the 4-hour. Yeah, I would say around here is the perfect entry. We would cover even the higher period moving averages, which is great. And stop loss and take profit for this trade is 80 pips and 160 take profit. This is only an example and you can take it whichever way you like. So GBP USD, very similar scenario. M pattern forming on the daily, although it has not yet broken. As you can see, we had a push towards the downside, but we did have an exhaustion of the higher period moving averages, and it went towards the upside. Now this is expected, and if we take a look at the 4-hour time frame, everything makes sense. We had a nice break over here, I had a nice push, exhaustion, bearish engulfing candle for confirmation, went towards the downside. Some people actually took this trade because I told them if it breaks the trend we should enter for a nice little short 120 pip move over here, so we already banked that. Now it's currently pulling back, which is totally fine. If we're gonna get a bearish engulfing candle, shooting star, or something to confirm some sort of selling bias, maybe around this area zone, would be a very nice trade to go back down to retest for another 120 pips. If potentially we break this area zone, it's going to take profit free level. So this is the scenario on USD Japanese yen. Is heavily trending towards the upside, making new highs every single time. We actually broke an important level of structure, this level over here. If we have a look at the daily, it actually has not broken. As you can see, daily wick not yet closed. However, the 4-hour time frame did close higher just over here comparing to these two levels, so this suggests bullish pressure whatsoever. Another problem I see with USD Japanese yen is the weekly moving average. The 50 zone over here has not yet broken, could instigate selling pressure going towards the downside. That could also happen. So even though it looks fairly bullish, I would say entry should be somewhere around here. So maybe an exhaustion towards the downside to the previous area of sensitivity, then we could potentially go for a nice little long trade. We can quickly even have a look at other sides making new highs over here, but other sides falling down very slightly, which means there should be some form of selling pressure next week. So to summarize, if a pullback happens, you could potentially enter the trade long. Don't enter over here, it's too risky. Here's the situation on Kiwi dollar. We had a really good week, 150 pips, went towards the downside. We're currently on a support on the 4-hourly time frame, even though this one closed a little bit lower, which should mean it's a new low. On the daily, this has not yet happened. We can see, a strong supported area. You can also see that the wick actually closed near the 200 moving average, which is a strong kind of buying pressure back. So it could be pulling back towards the previous area of sensitivity over here. Coming back to the 4-hour time frame, it would be around the moving averages. So early in the week, expect some sort of buying power just around here. If we do get maybe a candlestick formation, something like this over here, you could potentially short. However, I would still advise to be a little cautious because on the weekly time frame we haven't broken yet the 20 moving average, but a good thing happened over here. This candlestick actually closed lower than the previous lows, which is a great thing, and it shows bearish momentum. So quick summary, pull back, expect some sort of selling pressure. If found somewhere over here or maybe even over here, you could potentially get a bear risk reward, potentially enter here, drop back down for a retest. If broken, you could make even more money. All right, USD Swiss franc, this one is quite interesting. We had this channel, right? Every single time it touched, went towards the downside, and vice versa, went towards the upside. Now, the daily has not yet actually broken the channel. We had a huge attempt towards it, right? We had a nice push towards the upside. We actually entered this trade 76 pips. We banked, and now it pulled back, so it's good we portion our trades. However, on the 4-hour time frame, we can see things a little bit more differently. We can actually see the clear break over here and a nice little exhaustion. Now, if we do get a bullish engulfing candlestick around this area zone, maybe a bullish hammer, that could be a great little trade towards the upside to retest the top. If the top is broken, we can definitely go higher. Now, even though dollar Swiss looks bullish, we have to have a look at the monthly, and monthly is trending towards the downside. Candlesticks are actually below the 20 and 50 moving averages. Weekly time frame, same thing, as you can see, trending down. So we need to be careful, because the last candlestick closure pretty much reacted off the 100 moving average. We really need to wait and see, but I believe we had a nice push exhaustion scenario, and we should be able to get some sort of buying power over here. If we don't see it, don't take the trade. So Aussie US dollar on the monthly, as you can see, it's on a huge triangle over here, and we can also see that the 2 moving averages are currently reacting and finding some sort of bearish momentum, which is great. Now, weekly just crossed the 50 moving average, and the daily reacted to the higher period moving average as well. This trade was quite nice, 62 pips profit. However, it pulled back, which was expected. On 12-hour time frame, we had that nice M pattern, and we had the break of the neckline, which is great. Look at this bearish engulfing candlestick and a break of 100 moving average. How can you not trade that? Push exhaustion scenario, I expect another push towards the downside. If we just use the rectangle tool, once again, this is a good area zone to enter. However, if you want to be sensible, because we never know what's going to happen over the weekend, you might want to wait for a nice rejection of the 2 moving averages on the 4-hourly before you enter. So a strong bearish rejection to potentially retest the previous bottom. If bottom breaks, you could potentially go lower. So USD CAD trending up and down at the same time. We currently had a nice little flag pattern just over here. We can see it's a little bit clearer on the weekly. We also had a nice bullish engulfing candlestick in between the 2 moving averages, which is a great little thing. I need to mention daily, we had a nice closure above the 50 moving average. This suggests more bullish pressure. However, we did find a lot of selling pressure of the 100 moving average as well. Now, this is what the 4-hourly time frame looks like. We actually entered this trade with our VIP members, 115 pips made. That was a beautiful trade. Everyone was very happy with this one. Now we're currently getting a push exhaustion scenario. If we're gonna get some sort of bullish pressure, you could potentially re-enter for a nice retest, or be a little bit smarter, wait for that rejection of the 20 and 50 moving averages. The 200 and 100 are nearby as well, so this makes it even a better entry opportunity. So you could potentially wait for a trading setup, something like that, move your take profit, stop loss levels, and you could potentially have a 2.5 risk reward ratio in this case. That would be really good. I highly recommend joining our VIP services. You won't regret it. Okay, gold. So monthly is going towards the upside, and weekly is doing the same thing, right? We might have a rejection towards the upside, but on the daily, I said we should short, because 50 moving average has been broken with bearish engulfing candlestick. Beautiful, right? So what I believe is going to happen for next week, well, of course, we have this kind of channel over here going towards the downside, right? However, if we're gonna get a bearish engulfing candlestick, a shooting star, some sort of candlestick confirmation around here, you could confirm potentially and go to retest the previous bottom. That could potentially be a lower time frame scalp more than anything. Maybe if we have a look at the hourly time frame, as you can see, maybe some sort of rejection off here, or the 200 moving average. So let's mark the 200, come back to the 4-hour. Yeah, that's where the 50 is. So somewhere around here, some sort of rejection would be great for a potential retest of the bottom. If the bottom is broken, you could potentially go lower.